Hello everyone. Alright, so we're going to be taking a look at the Dow. Let's take a look at the Dow and probably crude. But I wanted to show something here. For example, is a good example of how a climax, a buying climax in this case, doesn't necessarily need to end a trend, but can actually just pause the trend. This idea that you have a big wave or big climax or whatever that's going to change the trend or end the trend is incorrect. Climaxes can pause a trend, go into reaccumulation, and then break out. So this happens all the time. This idea is climax and a secondary test, and that's the end, and there's going to be a new trend, etc. is incorrect. Many times you'll have a climax and whatever test, etc., etc. All it does is it has a pullback to support, and the market goes sideways and basically resolves the oversold condition, and then reaccumulates and then just goes. So this happens a lot, all the time. So with climaxes, you just have to understand like which ones you have to determine which ones are going to change trend and which ones are just pausing trend. So anyway, this is one example on the Dow right here, where you have very big volume, very big wave on top of 1, 2, 3, whatever, however many areas, right? However many waves. And what does it do? It goes sideways. It pauses the trend. Supply comes in, and all it does is just test support. This guy, I think, just did a minor spring or just test or whatever. So this is a really good example, because you can keep in your mind like the different situation, the different possibilities that can occur. So what is the possibilities of a climax? One possibility is, yes, it ends the trend. What is another possibilities? Another possibility is just pauses the trend, and there's a sideways consolidation and reaccumulation for a continuation. So this is a buying climax. We go sideways, reaccumulate, break out, and continue higher. And the other thing is, without the sequences of breakdowns, chances are your climax isn't a climax. So that's the third possibility. Just because a wave has high price volume doesn't make it a climax. You won't even know it's a climax. So assuming that a wave and pullback or whatever is a climax is erroneous, because in this case you have a very clear example of a lot of volume. Look at the big green that sticks out, right? You see that and say, is that a breakout? No. Why? Because the breakout will be back here against these levels when it breaks right here on slightly increasing volume, and it even mentions a breakout. So it's higher up, and it increases the likelihood that it's a climax to terminate a trend, especially when it has very high volume. But in this case, it's not doing that. And this is again because a climax isn't a climax until following sequences occur: A, secondary test; B, some type of change of behavior; and C, what do you call that? LPS, LPSY, or feathers weight, or whatever you want to call it. That it needs that, and then again after that, there's one final confirmation, which is basically the higher, higher, low, low. So the climax is not a climax until these sequences prove that it's climax, because the climax could just be buying for whatever reason. In this case, it was the morning time, so that's why you had a lot of price volume action here. And because a lot of times what you see as a climax could be a breakout on a higher time frame. So it's nothing more than a breakout of a higher time frame level, and then you have high volume, and then keeps on going. So you just have to keep these things in mind, because you don't know until the market proves itself. And then, if you have that mentality, you're more reactionary type of trader, meaning you trade depending on what, you don't try to guess what the market is doing. You see what the market has done and try to react to it. All right. And that also is for traders who have figured out to control their FOMO. right? So they're not seeing every breakout as a breakout, not seeing every climax as a climax. They're not trying to buy every pullback because it went to a Fibonacci level. Instead, they wait to see what is happening and whether there's some confirmations, etc. So this is a different way of doing things. Anyway, long story short, you had the situation, it's not a climax, not a climax until it proves itself by going the other way and by having confirmations. So now market goes up. This, you can see big red over here, 87. So this is selling. This is selling. But does this mean that's a change of behavior? No. Has it? Why? It hasn't proven itself. It hasn't gone through all the sequences, right? And if you take a look at the higher time frame on the left hand side, you get additional information, being it's in a very strong up wave. So do you want to fight this wave by saying, oh, this is a climax, put the short on and see if it kicks your ass? No. So you just wait, and what do you want to do? You want to see this level right here. See this big green? On a pullback, see how it reacts. It's about 50% retracement at the current time, and see how it reacts. And right now, just chill out. Alright, so what is to be gained here? The market basically did, on the higher time frame, all it did was break out, right, with the BO right here, and pull back to test, and then go. And the other couple of learning lessons are, one, this is, let's just put it like this. 3 situations to make it very simple regarding climaxes. One is that the climax, oh shit, wrong keyboard, 1 second. Climax ends a trend. That's situation 1. Alright, and this has to be proven again by secondary tests, by breakdowns, by lower lows, whatever. Alright, that I just explained. Second, climax can end the trend. This is very important. The climax can pause a trend. Okay, this is key situation, because what happens is basically goes into reaccumulation or redistribution. Alright, so this is very important, especially in strong trends where there's a lot of FOMO. So people see what they think is a climax and they want to go the other way because they missed the first move, you know. Anyway, so climax can pause the trend, and then finally it's not a climax. These are 3 obvious situations, and by taking a look at the different waves, you're going to develop intuition even about when a climax is a climax. But still, you should wait, because nothing's running away, you know. It's always another trade, always the same trade, and pullbacks, etc. So it's the same thing with all behaviors. Like right now, the market's moving sideways. So would you call this distribution? How do you know? Or would you call this absorption? Because you can see in the daily chart, you know. So was this distribution because it's going sideways? You know, a lot of folks, they see a chart and it's just a trading range. Doesn't mean it's distribution. Doesn't mean it's redistribution. Doesn't mean it's accumulation. So you have to wait and let the market show, and a lot of times just let it do what it's going to do and prove itself, and then go for a retest, because they have a tendency to retest after they prove themselves. Market prove itself, it retests all the time. The exact level is unknown, but the vicinity is highly probable. Like you see, most markets, they have a tendency to break out and retest the breakout. They have a tendency to break out and go halfway back. Why is that? I don't know. But that's that, that's just the way things are. Anyway, so we have some selling here. It's going sideways. We don't know if this is distribution, or if this is absorption. You don't know yet. So let's move on to the next market. All right, so crude is interesting because I was looking at this and like the intuition went off that this is the climax right there, and it turned out to be, so why? Because basically the buying after it and the confirmation. What does this mean? This means panic selling or stop running or whatever is meeting professional buying. This is how professionals get in, because they have such a huge size. They have to wait for a climax. They have to wait for a climax. For professionals to get in, they have to wait for a climax because their size is so big that they need that heavy selling in order to buy it all up. That's why this climax not has to occur, but very likely is supposed to occur. So they can buy it during the climax, or they can buy it in an extended range where the market goes up, down, up, down, up, down, up, down. And what they're doing is like buying 100, dropping 50, buying 100, dropping 50, buying 100, dropping 50. How can you accumulate, right? If you're smart money, you need to accumulate. How can you accumulate? One, during panic selling, so you take the other side. Two, by forcing the market in a range of prices that you want to buy, so it goes up, down, up, down, up, down, up, down, creating quote unquote cause, right? So anyway, so this is what's going down. You have what is it called? Panic selling, climax, meeting professional buying. So after that, what the market did is in the morning it retested and sprung. But now you're going to notice when it goes down and it does this, it does all this. 188, bigger than 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, I think. I don't know. Yeah, about 10. So the buying comes in. So this, and also in the morning against that level that the buying was in, in the weird hours. So they have a level and they're buying, and that's about it, and the market goes up after that. So this is also very important. The time of day is really important, because if you have overnight sign of strength, watch the low of that sign of strength, because chances are when the next morning when there's more activity and people are awake and ready to trade, they're going to look at that level. All right, that's all, folks. Have a wonderful day.